What's up, YouTube? Don Fran here. We are going to talk about risk management, how I manage risk in the trading world. This is arguably I don't know if it's even an argument. It is the most important aspect to this, right? It's the difference in rolling the dice, turning your phone into a personal casino, and actually making decisions based on other things. How whatever your trading style is. This isn't just particularly to mine. And we're going to jump into the charts, and I'm going to show you some. We're just going to go through some examples. But to get into it, it's how much per share are you risking. You have your entry, you have your exit, you have your take profit. Now, a lot of you guys are just a pro at having the entry and where you're going to take profit. You can tell me down to the dollar what you're going to spend that money on, but you have no idea how much you're actually risking. You have no idea what's at risk, and you're just kind of like, well, later on, it's just going to suck because one, you're going to be down, you're probably going to bag hold. You had no real plan to begin with, so it's kind of a have a plan or plan to fail scenario. So, basic, entry, exit. I haven't even talked about anything else. Entry, market price, whatever it is. Maybe you want a limit buy, whatever. Entry, you got that figured out. That's the easy part. Where are you getting out? Where does that story change? I am buying it because of the RSI. I'm buying it because Don's zone. I'm buying it because whatever your favorite indicator is. If that's why, where is that indicator broken? Like, here's where that didn't work, because that's your exit. Now, if you're buying a ticker at $100 and that story changes, it breaks at 90, whatever the number is, where in your head is it? I should be out because clearly that was not the right scenario. Let's say it's 90. Entry at 100, you're going to exit at 90. If you do not even have those two numbers, then you shouldn't even, we can't go any further. Some of you guys, again, you're just really quick to, it's going to go here, it's supposed to go here. I hear all kinds of definite terms all day long, and things never, I've seen so many things just never pan out. Like, even there was just no dip that it eventually did, it just kind of faded away and never came back. I can't stress this enough. Where are you getting out? Because we need those two numbers for some basic math. This is very basic too. So again, getting at 100, you're stopping out at 90, you're risking $10 per share. If you only want to risk $100, your emotional, comfortable level of risk is $100. You're only going to buy 10 shares. I don't care if you have $1 million account. You have an amount. You're emotionally attached to amount, right? Let's say it is $100. You go out risking $50, you're not going to care. Now you're going to start making stupid decisions because you just don't care. Or you go out and you risk $200, $300, $400, $500. Now you're losing sleep, you're getting anxious, you're watching candles. You're just, should the plan change, you're on edge. You are emotionally not able to risk that much. $1 million in your account or not. Your emotional availability to trade and stay focused is $100 in this example. So if that's it, I'm only going to buy 10 shares. No matter what. Now, let's say you wait for the dip. It's at 100. You're going to stop out at 90, but it still makes sense to buy it at 91. Now, with that same stop out, you can buy 100 shares because you're still going to risk the $100, but now it's only a $1 per share move. That's how everything is based. Every move I make is, wherever the entry is, it's usually right there. And then where am I getting out? For me, it's below those zones. How much per share am I risking? At that point, how much can I fit? Like, personally, I like to risk $2,000. How many shares can I buy and still risk $2,000 or less? So let's jump into some charts, just examples, and we'll throw it out. So let's find one on the zone. Hang on. Let's just draw out a zone. We got here. There's our here's our zone. So my strategy, you've seen this before a whole bunch, especially if you've been watching my channel for a while. Let's say I'm thinking we're going zone to zone. We're gonna rock this thing. We got two zones right here. We'll paintbrush it up right now. Boom, we are right here. We are headed south. Okay, headed south. We're right here. Now my stop loss. You know what? I was going to really OCD this and make that green, but Okay, we got some wicks right here. Call it a wick, candle body, whatever you want. My stop loss, I wouldn't do it at 17.50. Let's go to the 85 cent mark. You've seen me talk about 85 cents a lot. Give me something. Hang on. It'll make a lot more sense if I do what I would do. So, go here. Now, I once got called cheating in the stock market because I put my stops below the wicks. So, if you're not opposed to that, that's how I do it. That's how I avoid stopping out. Put it below the wicks. Let's call it right here. Oh my gosh, how far do I have to zoom this out to get? I just want to get to the 85 cent mark. We're calling it. That's enough right there. Can we do it? Oh, one last time, guys. Give me 1 second. Hopefully this is already clicking in your head and you're like, okay, I actually get where he's stopping out at. It makes sense now. I've made this video before, a long time ago. It's 1% stop loss the correct way. And to me, this was common sense. I came into the trading world thinking like this. And it blew me away that when I made a video about this, it changed everyone's trading career. Like, I thought this is what everybody was doing. I was just doing that because the YouTube world is supposed to put things out there. All right, so anyway, we're coming down into the zone. I think we're going to go zone to zone. So I'm about to buy. You guys have saw my previous video. Should I link? Where's the quote? One of these corners, I'll actually link it up in the card. I talk about how I buy a stock inside these zones. So we know this is my type 1. This is my type 2. Right about here will be the type 3. All right, so get a calculator out real quick. We'll have it down. Now, I do a rough estimate, but for here we'll do exact for you guys. Let's say we're buying right here. Okay, now my risk from here to here. That's $57 a share. 58. We're going to round up to $58 per share. So 2,000 divided by 58. I can buy 34.5 shares. So right now, if I'm going to risk a little bit more, realistically I would just buy 35 shares. If you want to round down, you're going to buy 34 shares right there. So let's really spell this out. $2,000 risk. All right. So right here, 35 shares. Make another color for you guys. Okay. Now, let's say we're grabbing the type 2. This is my personal favorite, my bread and butter. I do buy bright red candles. So we grab it right here. Now we're risking $25 per share. So again, $2,000 divided by how many shares can I fit for 25 bucks per share? I can buy 80 shares. That's why I love that. Because I am risking the same amount. And I can buy 80 shares. Hopefully you guys already know, you're about to figure this out. This is clicking for you guys. And you're letting me know in the comments down below. Holy crap. Now the type 3 is typically a little bit higher because if there's any kind of momentum leaving, this was, it's skittish, so as it's coming down, you're filling down here, whereas it's leaving, you're filling on the up and up. Also, I don't like type 3, so you're typically grabbing it outside the zone. Right now, we're risking $63 per share. So $2,000 divided by 63, I can buy 31.75, so 32 shares. We can round down, go 31. So you can see here, regardless of your entry, regardless of anything, I will always risk $2,000 because I'm stopping out right here. Now, the only thing that can really get you with this style is a gap down in the morning. Now, I'll make a whole video. I call that recovery mode if you ever hear me talking about that. At that point, just a quick rundown, it's I let the first 30 minutes play out and then no new lows. So even if it's red the first 30 minutes, that stop goes right there. So if it's going to check mark and trail the rest of the way up, then I get the rest of the way up. All I'm doing is trail. I'm not really adding on. All I'm doing is just hoping I give back less. But when it gaps down like that, it sucks. That's part of the market. So on days like that where, hey, you're buying this, it's raining knives, should you be buying this? You make the decision, should I dial this back? Do I stand to actually catch one of those gaps down in the morning, and should I be risking $1,000? At that point, you know what you're doing with these shares. You're cutting them in half. It's quick. It's easy math. So let's just get into some examples. Let's find some things. I don't know how much clearer I can get than that. Let's just save that anyway. All right, here's NVIDIA, type 2. Now let's say you're thinking that's a giant bull flag. You actually want to risk all the way down here, right? Here's my zone. Now I would be stopping out right here at, it'd be 291.85 would be my stop out. So just on that alone, 291.85, I'd be risking $2.30. Just some quick math, 2,000 divided by 230. I could buy 870 shares. Now, again, that's why I like the type 2s, because I'm going to know probably in the next few minutes whether I'm right or wrong. And if I'm wrong, I move on. I'm on to the next one. But if I'm right, I put my stop in the green and I trail it. That's why I buy when it makes sense. I sell when it makes sense. This is my style. Is the RSI? I don't know how I would base off the RSI. Whatever. A lot of you guys have the RSI and MACD, and you think that's the way to do things. I don't know how I would do it off of that. Maybe it's the only example I could think. That'd be a very hard way to actually be profitable. Maybe you buy right here, but once it gets here, it's I wouldn't. I mean, if I thought that made sense, I would be saying it on my YouTube videos. Whatever maybe this is the RSI for you. That's 24 oversold. It's not getting any lower. Next thing you know, it's at 18. Did you get out? Because that would be your exit. It'd be kind of hard to chart that out because with divergences and all that. I really wanted to find an example for you guys, like using an indicator. Hang on. Let's just get back to it. Let's say markets are choppy. You've heard me say, tighten things up, load it up right here, you're going to be right or wrong, or you give it wiggle room. So let's say you want to just give it all the way down here because that could be a giant bull flag. You're not interested in any of this chop. You're going to kick your feet up on your desk and you're just going to call it good. So you're going to risk $23.50 per share. So that's $2,000 divided by $23.50. I can buy 85 shares. Okay, now you see the difference between I'm buying 800 shares and 85 shares. You're still in that particular ticker. One really is more likely to tag out than the other. You know, at that point, you are riding a smaller position up, and that seems to be everyone's argument. Oh, but that's only 85 shares when I can afford to buy 1,000. They can afford to buy 1,000, and they still won't stop out right here. They'll just wing it. Play it by ear. It's the most dangerous thing you can do because you're rolling the dice. You're just only going to sell it if it's green, and you're going to just ride some things down to, I don't want to say down to zero, but low. You don't want to do that. Have a plan or plan to fail. Let's say you took that position. You gave it plenty of wiggle room. To talk about adding on, let's say it bounces. Now you're 85 shares. The person who decided to take on that risk, first of all, there is never a story. There's never a scenario where you can tell me risk and reward are not on a scale. You start giving one, you're taking from the other. This guy took on a lot more risk buying that many shares with a stop right there. This guy took on a little bit less risk, so less reward. But it turns around, this guy's happy. He's talking your ear off. He thinks you should add on. Now here's $2,000 worth of risk. But let's say it's up here, so now you can comfortably put your stop right here. you're not going to risk $2,000 at that point. At that point, if your new stop is right here, okay, you already have your 85 shares. Let's say it's from here. Adding on takes a little bit of brain, like at least 4 brain cells. The other ones took 2. So we're 6 brain cells deep into this trade. Okay, we're about to risk, we'll call it $15. Let's see, $15 per share, so 2,000 divided by 15. 133 minus your 80, was it 85 shares? 80 minus 80 shares. So you can add on 53 shares and still be in your same risk. But even better, what I don't like to do is ride, 1,000 shares up and 2,000 shares down. So once that stop is in the green, you have a little bit of a cushion. You put that stop there in the green, and as it continues, then lean into it. What you don't want to do is end up adding on as we're coming into the bottom of the zone. So I do suggest you watch my previous video that I tagged, that I talked about. It's how I buy a stock. Watch that video because it would make sense, because what I wouldn't do is add on coming into this top zone. Let's do one more. Moon status. Say you want to catch the knife on Neo today. I want to catch the knife right here. You think that's a pullback and test from the top. Quick, easy. 30.85 would be, let's do 30.45 because that's another favorite of mine. That's all the wiggle room in the world. You don't need a calculator. Right there. 31.53, 31.45. You can round the few pennies. You know what that is? That's $1. Let's bust that out on the calculator. 2,000 divided by $1. Yep, math checks out. You can buy 2,000 shares. Okay? Cut that in half. Let's see, you can buy 4,000 shares. But I'm not kidding. This is a real trade we took, and we stopped out. Imagine not stopping out. Imagine you think this thing's going to the moon, and you believe some news. You just believe whatever you want, and that's all it took for you to buy. Now, because you read the news, you read someone's ridiculous price target, you read that, I don't know, they're taking over the world, you think EVs are the thing. You got the buy figured out. That's sweet. So you got the buy figured out. You know where you're going to sell. People said this is going to go to 75. I'll tell you when. Last trade right here. It was this week. I'm trading right here. He said Neo is supposed to go to 75 this. Supposed to. Yeah, never did. Imagine you bought off some stupid idea like that. Now, I call that stupid because it's not how the stock market actually works. The stock market is not fake. It is not rigged. Your ideas are. They're completely ignorant. To think you know the why or anything's supposed to do anything is asinine. Nothing's supposed to go anywhere. Nothing has to do anything. And just because of your luck, it'll probably go against you. So imagine not having that stop out. You have your news and why you bought, and then you have a price target. That's not even a plan. That's a joke. That's a hope and a prayer, and you're not even religious. And it's just going to sell off. And then what was a $2,000 stop out right here, think of how much more you just risked. Think of how much more you're down. Now you're just throwing up. You're anxious. You don't know what to do. Maybe you just add it on because you're just so red. You're just hoping for let me just bring my average down. Everything changes at that point. These plans are set for a reason. Manage your risk. That's how I manage my risk, and I stick to it because that would be silly to just say I'm going to get out here. That's where the story changes, and then decide, nope, I'm just skipping down the sidewalk, happy as can be, bag holding this, watching my hard-earned money go to zero. So anyway, let's wrap this up. It's already longer than I wanted to on this video. Entry. Where are you exiting? I don't care about the news. You shouldn't care about the news. No one's price target. Art comes out and says Tesla 25,000. That is just, this thrills me to death. Okay? You got those two numbers figured out. Congratulations. You're like a regular market maker. But let's get the important number. Where are you getting out? Entry. Where are you getting out? How much per share? How much are you going to risk? Now, how many shares can you fit into that risk? And there's your whole plan. And then it's going to pan out. I can tell you this right now. You're going to be right or you're going to be wrong. and then on to the next one. By the time that trade closes, that's it. Whether you want to, even if you want to get right back in, that trade that just closed, it's in the past. That's like a fingerprint. You can't change anything about it. Like right here, we stop out. Boom. And I want to get back in. Some people love to say, well, it's cheaper than I got before. Or let's say it was a green candle. Let's say we stopped out right here. And now it's up here. I know just look where the line is. Now it's up here. Some people are so, I don't want to say dumb, ignorant. They won't buy it because, well, it's at 39.45 and I stopped out at 30.38. It's higher than I stopped out. Okay, so you're telling me you want it to go, the thing you want to buy and go up, you want it to go down right now. No, that's the dumbest thing I've ever heard in my life. That trade, in the past, if it is 2 seconds ago, in the past. Your new trade, the price is what? It's here. Where is your stop out? How much per share? How many shares can you buy? It is never not that formula. So I'll end it here. Let me know in the comments down below. Have you seen this video before from me? Did it change your trading career so the other people can read these comments? And then let me know, did you share this to your friends? Are they doing this? And I will see you guys. The next video will be how I stop out. I do know that. So we got the how do I buy stocks, which explains these zones and entry types. Now we got how to manage risk. The next video will be how I stop out. I'll put this in a nice little playlist for you guys so you can share the whole package to your friends. Hey, stop being dumb. Watch these 3 videos. Your friends will love it. Anyway, I'll see you guys in the next video.